Welcome back to the January 12th edition of Metals, Money, and Markets. For MiningClips.com, I'm Rob Goodman, and as always, the Mercenary Geologist, Mickey Fulp, will break down the action. Well, Mickey, the theme is the dollar's getting pounded and the equity markets are on fire. But let's start here in the metals where gold absolutely is on fire, but palladium is the big winner here.
Gold's up 1.5% on the week, once again to 1339. We have not seen these levels since the first week of September, which was the high for 2017. Silver still lags 1724, only up 0.5%. Platinum had a very nice week at $9.93. It's gained well over $100 over the last 5 weeks, up 2.6%. But the ratio with palladium remains the same because palladium was up to its all-time high today at 1114 for a 2.8% gain. That ratio still remains 0.89. The gold-silver ratio is pushing 78, and the platinum to gold ratio is actually come up a bit over the last 3 weeks. It's now at 0.74, but bear in mind that's still an all-time record low.
And copper flat this week.
Copper was flat. Copper has been consolidating since the beginning of 2018 in this 320 range, 320 to 330 after a big run-up from early December when it briefly went below $3. I think the low was 295 the first week of December. Not bad, not a bad idea. We kind of like this 2 steps forward and then a pause, stepwise markets. One thing we need to look at these industrial metals, which, for instance, zinc hit a 10-year high this week of $1.55. We got the Chinese New Year coming up here in 3 weeks, something like that, and that's always a low demand time for metals. Meanwhile, in the copper market, it's slightly backward today with a 1-month contract. Very, very strong contango going 6 months out, so that's positive for copper.
And move over to the energy markets. Uranium off a percentage here, but oil, the big winner here with inventories being way down.
Yeah, basically uranium was flat, lost a quarter. It's still been in this range-bound area. It closed at 23.75. But the real big news in the markets, other than the major equity markets, has been oil. Oil's on the boil. It's been up 4 weeks in a row. Closed the day at 64.35 for a plus 3-year high. Last time we saw this level was in December of 2014 as the oil market was starting to crash. Couple of things going on. Rigs are up 15% in the U.S. this week. That has to do with the fact that this is really a sweet spot for shale oil. U.S. production actually was off on the week. That's pretty unusual. Inventories, get this, Rob. U.S. inventories down a whopping 22% since mid-April, and imports are off 15% year over year. So remember that 2 years ago this week, oil was trading at less than $30 a barrel.
Let's move over to the currencies here. As mentioned at the top, the dollar weak, euro rallies, but loonie was off against the dollar.
Yeah, let's go loonie first. It lost 0.5% despite the very strong oil price, but it's still above 80 cents at 0.802. Dollar lost big time once again, 4-week downturn of the dollar. We like weak dollars. The market likes weak dollars right now. Closed at 90.94. The last time it was this low was well over 2 years ago. Euro gained 1% up to 122. It's been a long time since it's been that high too.
Yeah, heading over to the equity markets here. The Dow shakes off some midweek jitters, but ends up on a high here, and same with the S&P. Good week all the way across the board.
Really good week on all the U.S. markets. All of them finished at all-time highs on the uptick. I think all session highs today are nearly by the time of the close. Just keeps rolling along. We had all-time highs and some big fundamental industrials today. 3M, Boeing, and Caterpillar all hit all-time highs. The big techs, the five big techs, all hit all-time highs today. So let's look at the markets. Dow 25,803 up 2%. S&P 500 2786 up 1.5%. Nasdaq up 1.8% to 7261. We're looking at 4 to 5% gains in these major markets in the first 2 weeks of the year. The markets are just on fire. In my opinion, they may be getting a little frothy here. You're starting to see retail investors come piling in, and when that starts to happen, it might be about time for a correction. We'll see with the Trump tax cuts and all these big companies raising wages and giving bonuses. It's hard to imagine that it's going to correct anytime soon. Meanwhile, the Toronto Venture Exchange had a rough week, quite a week, in fact. Very high volumes, averaged 177 million shares per day. Hit an intra-week high Tuesday morning of 939 or 940. We haven't seen that level something for 3 years or longer. More than 3 years, almost 3.5 years. But then it took a big tumble, 3-day sell-off or a 2.5-day sell-off, finished at 878 for a 2% loss on the week. It's probably some profit taking coming in there, but it's mainly the weed and the crypto stocks. Both got hurt very badly this week. Bubbly stocks that got way too ahead of themselves, big sell-off. But I think that's good. We're starting to see a lot of retail come into the junior resource sector.
All right, Mickey, appreciate the insight. We'll keep our eye on that news wire, and we'll catch up with you next week. Have a great weekend.
All right, thanks, Rob.